Hello and welcome to another of our In Conversation series with Fidelity International. Despite headlines about slowing growth, inflation pressures and talk of rate cuts, global markets have stayed remarkably calm, even rising, driven by optimism around US technology and AI-related stocks. So, what does this disconnect between sentiment and data mean for investors? And how can portfolios stay resilient through uncertainty? With me to discuss this is Caroline Shaw, Portfolio Manager in Fidelity's multi-asset team. Caroline, it's great to have you with us.
Hi, Juliana.
Caroline, we're seeing plenty of negative headlines and yet markets remain resilient. How do you make sense of that contradiction?
If we take the equity markets, corporates are in pretty good shape still. So I think that is the answer here, looking at the data. Earnings growth is strong, been some of the highest in 3 years recently. Sales growth is strong, margins growth is strong. It's not to say there aren't worries out there, but broadly we're in a less worrying environment because those companies are surviving pretty well.
And what about the short-term outlook, Caroline? What are the main risks that you're watching in the months ahead? Where do you see opportunities emerging also?
We're keeping a really close eye on a few things. So firstly, the labour market in the US and how inflation is impacting the US as well. The AI build out requiring data centres and power is already impacting utilities, materials and industrial sectors, and companies in there have seen quite a severe, steep rise in their valuations as a result of that AI tailwind. We think there's some quite exciting opportunities in fixed income, particularly in emerging markets, some of which are due to regulatory change, fiscal change, but also if you think about the influence of currency, the weaker US dollar is a real tailwind for emerging markets.
Let's talk about Fidelity's portfolio positioning. What tools or strategies are you using to stay flexible?
I think at the moment that diversification is your friend narrative is really powerful because we've seen bond equity correlations move more positive, which means that if you only have bonds and equities in your portfolio, they may move in tandem, and that's not good. So you need other things in a portfolio, and that's where diversification and that's where multi-asset investing comes in.
What other diversification opportunities are you seeing?
We're finding that options are really helpful. They give us a known downside because you can only lose the premium you pay, but they allow us to build resilience in the portfolio and help us capture upsides in markets where we're maybe defensively positioned or protect against downsides.
Let's speak about gold then, which remains a consistent part of your positioning. Why does it continue to play such an important structural role in Fidelity?
We had 28% return from gold last year, and this year it's already over 50%. It's been absolutely stellar, the rise in the gold price. Investors broadly are underweight gold. You know, by any sort of metric you measure it on, that should be a tailwind for the gold price too.
Let's focus, if we can, on a longer term outlook. Let's say 12 to 18 months ahead. Which asset classes or themes do you think are best placed to perform and which might warrant more caution?
We see growth opportunities throughout the world, certainly on the equity side. Earnings revisions have been positive, which means analysts are uprating their expectations for companies around the world. The US is leading the way. Europe is looking particularly interesting. It has cheap valuations. It has performed well at the start of this year, but has really been a laggard for the rest of the year, maybe not reflecting the tailwinds and the positive outlook that we see for Europe at the moment.
Sounds really exciting. Any final thoughts?
I think we're at this perfect point for multi-asset with positive bond equity correlation, making people focus on alternative types of investments as well. So for me, it's time again for active management and for multi-asset.
Thank you so much, Caroline.
Thanks, Juliana.